What is your pick for Q4 and why?
Look, let's just put the setup here first. We like the small cap space going into the fourth quarter. There has been such significant underperformance of small caps. They're down about 20% from their highs, and that's part of the setup as we go into this. And if you have a look at the small cap value stocks, which is an area we think is very attractive. So we like McGrath. It is a modular rental company. So what is modular? Think about if you go to your kid's classroom and they need to modernize the school, they're renting you that portable classroom that's sitting there. If you look at construction sites, they're renting the offices or they're renting the storage that's sitting on those sites. So that's why we like it. We think that the space that they're in is extraordinarily attractive, and we think the setup going into Q4 is very attractive as well. You've got small cap, you've got good valuation, you've got a good setup, and that for us makes a really good stock.
Okay, very interesting. So we're looking at shares, though. They're only up about 3% year to date, so certainly a laggard. I want to ask you, small caps in general are more interest rate sensitive. What's going to protect this stock from being interest rate sensitive?
Look, it has leverage that's just over 2 times, and that leverage is coming as a result of a great acquisition, actually asset swap they did earlier this year. So they swapped some of the assets that are more cyclical in the tank supply business, and they swapped it with another company, Kinderhook Industries, and got their modular business. So the reason we like that is this gives scale to them, more scale, it gives more density, and it also helps them in terms of increasing the utilization of their total fleet. So we think it was a great deal, and despite the leverage just ticking up, we don't think it's a real concern here.
All right, so you're in favor of the acquisition. I want to ask you about something else. 80% of their business is in that modular office space business. Another 20% comes from the rental of electronic test and measurement equipment. That business is pretty soft recently. In their most recent report revenues actually fell. They said it was due in part to lower chip demand. It's also their higher margin business. Are you concerned about that business continuing to fall?
I think it's baked into their guidance number already in terms of that business being weak, and we actually think it may be able to surprise. But let's take a step back because, yes, it is the business that is slower growth. It is higher margin, but it's high quality, and they are the only company. One of the other areas that they've been suffering for in that test business has been the lack of equipment that they need to be able to rent out to their suppliers. But they are a partner of choice, and that's something in a small cap that you really need to look for. You want to look for companies where they're partners to their customers, because that really makes a win-win relationship. And on that testing front, if you have a look, the 5G transition is coming, and that's really the secular long-term headwind, tailwind here.
All right, they also did raise their guidance, so a fair point there. I do also want to ask you about the valuation. 22 times forward earnings. You're certainly paying up for that growth. Are you also worried that all the growth's already happened? These are generally longer-term leases when we're talking about rentals of modular equipment. We've seen the Inflation Reduction Act, other Infrastructure Act, other things. Aren't those leases already signed, and aren't we about to see them run out?
Look, the average lease is 12 to 24 months. It depends on the market that you're going into. But if you have a look at the monthly average rental rate on their existing equipment and you compare that to what they're getting on the new equipment, there's a 48% differential. So there's just such a runway in terms of pricing. Secondly, you've seen a lot of increase in the cost of this equipment, which makes it less easy for customers to justify the buy, much easier to justify the rent decision. So we actually think the setup is great. We think that the pricing outlook is great. You mentioned the IRA. That's just kind of the wind in their sails. As we look into the fourth quarter, we're positive.